old hat and for something new. And hopefully we'll at least encourage some to understand a little bit more about excise. And definitely from this webinar, I would assume that there would be further questions and more in-depth discussions. Just a bit about myself. So I joined Turner Shipping very recently. Prior to being with Turner Shipping, I spent the better part of my adult life working with the South African Revenue Service and the Department of Finance. And while with SARS, I was the national specialist for the petroleum industry primarily, but a long part of my career was the national manager for excise taxes as a whole. Also in project management, and I was the Customs and Excise Audit Manager. Part of my hats is serving as the South African Petroleum Industry Association Chairperson for Indirect Taxes, and I was awarded the Award for Innovation and Service by the World Customs Organization. You have my contact details up on screen, and it will be shared with you after this presentation. If there are any other detailed questions or further explanation that is required. Just a bit about the exclusions to this webinar. The excise taxes and the liquor industry is a very, very broad topic, and one could ad nauseum have this conversation over many, many days. And so we thought we'd limit it to excise taxes. So we will not be talking about the Liquor Act, the licensing, the thresholds, the premises requirements, etc. And will not be engaging in other SARS legislation because under the Tax Administration Act, there are many other acts, for example, the Income Tax Act and the VAT Act. And so we'll not be talking about that, and we'll be excluding especially tariff heading 2206, other fermented beverages, because those are very specific and really needs one-on-one consultation or one-on-one in-depth analysis to correctly classify them. So we've narrowly focused on really the topic at hand, and that is excise duties, excise tax compliance in the beer industry. So what we will be covering in this webinar is an introduction to the law that governs the provisions for the excise industry. We want to establish then in part 2 excise duty liability, and we'll be talking quite a bit about what then drives to that. We'll be talking about compliance to the law, and unfortunately for those participants who remember long lectures at class and at school, the part 3 is quite a lengthy part of our presentation today, but in fact a very important one and very needed for the discussion of this topic. And then ultimately we'll conclude with the alternative relief mechanisms that are available. Just a note to the participants, if time permits, we'll have a question and answer session at the end of the presentation. And as Julian has already intimated, that please feel free to capture any questions during the presentation, during the webinar on the conversation bar, and Julian will then capture them and present them at the end of the webinar. The material that I'm presenting, both in this presentation form and in a narrative form, will be distributed to all participants who registered via the Craft Beer Association. Just a quick check-in if everyone is still with us, and if Julian could just give me the thumbs up that one, my vocals are okay and that the presentation's okay. Great, thanks Julian, thanks so much. Right, so a bit of introduction of the law, and as I started off, that there are many laws that govern the manufacturing of liquor products in South Africa. And in fact, there are sometimes disparate laws when it comes to provincial legislation. And so we're going to narrowly focus our attention in this webinar on the excise taxes and the excise tax regime in South Africa. So the excise tax regime currently, and I say currently because there are moves afoot to differentiate between customs and excise. in that there's already been published a Customs Act, which is separate from excise. But at the time of this presentation, the entire entity of Customs and Excise is governed in terms of the Customs and Excise Act 91 of 1964. And for the purpose of this webinar, we'll just refer to it as the C&E Act. And what the Act entails is providing for a mechanism that allows the Commissioner, who is enacted by the Tax Administration Act, to levy customs and excise duties, prohibit and control the import of and manufacture of certain goods, and any matters incidental thereto. And matters incidental thereto is naturally given, for example, with the world being exposed to weapons of mass destruction. So the protection of society in terms of any item that may be imported, exported, or manufactured that may pose a risk to society is also governed in terms of the Customs and Excise Act. In terms of excise duties, and you'll note that there are notations which are extracts from specific materials, which are also referenced at the end of this webinar. In terms of SARS and the view taken by the state, excise duties and levies are imposed mostly on high volume daily consumable goods. And I think that there's always a bit of a pain in the sentiment in that it is, as well as certain non-essential or luxury items. The primary function of these duties and levies is to ensure a constant stream of revenue for the state, with a secondary function of discouraging consumption of certain harmful products. And sometimes this view, and it's not the subject of this webinar, but sometimes this view as expressed by the administrator, being SARS, is taken, I think, sometimes a bit too literally, and the latitude thereof is extended beyond what the intent of the law is. And if one goes back to the intent, it is really the protection of society and levying of certain taxes in order to facilitate that protection of society. The Customs and Excise Act then is supplemented by various schedules to the Act, and we've extracted 3 schedules that are pertinent to this discussion. Schedule 1 is where all ordinary customs duties are described, and in fact in Schedule 1 most descriptions and notes that describe certain products are contained. Schedule 2A to the Act, or 1 Part 2A to the Act, is where specific excise duties on locally manufactured and imported goods are contained, and Schedule 6 then provides for specific refunds and rebates of excise duties, and just by note, fuel levies and environmental levies are contained in the schedule to the Act. Just a bit about the powers of the Commissioner. So 2 distinct sections that jump out at you is 1, the Commissioner in terms of Section 2 has powers to enforce the Act, but in Section 3 and 4, the Commissioner then can delegate those powers. And an interesting note is the Commissioner can delegate their powers not only to individuals who are employed by SARS, but also any other person who may have vested interest or who, by the discretion and direction of the Commissioner, needs to fulfill certain activities. In terms of the harmonized tariff, and so please note that as we're progressing through this webinar, it's in somewhat of a cascaded form, working up towards the end obligation of the taxpayer. The harmonized tariff then is administered by the World Customs Organization, and so internationally certain products are classified in terms of the harmonized tariff. And it's just an interesting note, and you'll see this note thrice throughout this presentation, is that locally manufactured beer should be tariff classified upon registration with the Commissioner. And I'll talk to that a bit later in this webinar. So what are the risks of Section 1? Well, in terms of Rule 59A, there's a distinct risk, and I think that's the important part of this webinar and information like this to follow, is that the requirement by the Customs and Excise Act and the Rule 59 there too, is that any individual who, and especially beer manufacturers or an employee, is required to have sufficient knowledge in terms of the Customs and Excise Act. And this is actually legislated. And the reason for this piece of legislation is that if there are any challenges with the administrator being SARS, that in fact sufficient knowledge exists within the entity being the beer manufacturer. So given that this is a critical part of the legislation, given that the administrator relies heavily on this when imposing certain sanctions, the gravity of this workshop and engagements potentially to follow is so critical to the industry. So you'll note also, and this is not meant jestfully, that on the risk slides throughout this webinar, we'll have a leaking barrel. And I was joking with our colleagues from CBA say that I couldn't find a leaking beer barrel, but please take the sentiment that these are the things that trip us up in losing our profits in our business. So let's move on to establishing the excise tax liability for the sector. So as we worked up, we then saw that we have the Customs and Excise Act, and supporting the Customs and Excise Act or augmenting it is Schedule 1, Part 1, which then contains the harmonized tariff. In terms of Schedule 1, Part 1 then, there are two distinct ones that jump out at us, and that is beer made from malt in traditional African beer, and beer made from malt other, which has two different tariff headings and subheadings in Schedule 1, Part 1. For the purpose of time and for the benefit of the audience, we'll primarily then be focusing on beer made from malt during this presentation. So further definition is given from SARS in terms of beer and traditional African beer. And so they classify traditional African beer, and it's somewhat taken out of the notes to the harmonized tariff, but a definition is given that traditional African beer is generally defined as a non-clear beer made from sorghum or malt. And I think an underlining characteristic is with an alcoholic strength usually less than 5% per volume. And that is what is manufactured in SACU region. And just a note at the bottom that South Africa forms part of the Southern African Customs Union. So whenever the Act refers to SACU, whenever notation is referred to SACU, it includes South Africa. Whereas malt beer is generally a clear beer made from malt with an alcoholic strength, usually again between 3 and 6% per volume. And it's just interesting to note that the administrator SARS doesn't use the word specifically or in context. They use the word usually, which then lends itself to the argument that there are varying degrees of alcoholic strength, both in traditional African beer and in malt beer. By extension, then, from the Customs and Excise Act, which then provides for the schedules, the next schedule of interest is then, while Schedule 1, Part 1 classifies the product, Schedule 1, Part 2A then defines what excise duties are due for this specific product and how they are levied. Again, I'm going to still continue using beer made from malt in traditional African beer and beer made from malt other. And you'll find a distinct difference between the rates levied for the two products, where one levy is 7.82 cents per liter, and this is as of this year, and the other is 115 Rand or so per liter absolute alcohol. And I think that is a distinct difference and that one needs to pay attention to, is that on the one hand, beer made from malt traditional African beer is a very small percentage in terms of a rands per liter, whereas beer made from malt, which this audience refers to primarily, is per liter absolute alcohol. Can you just an indication from the audience, and perhaps Julian can give me some feedback if my pace is sufficient, too fast or too slow for the audience?
This is all good from my side. Thanks very much, Gregory. We just have a question, obviously. That value that is there, is that a VATable amount, or is it including or excluding VAT, and is it VATable?
The liters, perhaps, are we talking about the excise duty rate?
That's the rate, yeah. The beer made from malt, the 007 cents for the beer from malt or traditional African beer, and the 115.08 per liter. Is there a VAT? Is that a VATable amount or not?
Okay, great, got you. So VAT is determined, and while we did make the note that it will be excluded from this discussion, I'll weigh in very briefly on it. So VAT is determined as the value of the product, including all duties and levies. So when you calculate VAT, for example, on an importation, you'll include the customs duties, excise duties, with an upliftment of 10%, which will give you the added tax value. And based on the added tax value, VAT is then calculated. Therefore, for locally manufactured product, the VAT would be applicable to the end value of the product, including duties and levies. So the short answer is, if the value, for example, of a liter of traditional African beer were 10 Rand, then the VAT would be on 10 Rand and 7 cents, 10 Rand and 8 cents to round it up. I hope that clarifies.
Thank you.
All right. Thank you for the challenging questions, colleagues. I appreciate keeping me honest and keeping me on my toes. So in terms of calculating the liters absolute alcohol, again, apologies for those that have been in this business for years, but as an introduction to excise, we needed to cover all the bases. So the excise duty is calculated based on the bulk liters times the alcoholic strength, which will give you the liters absolute alcohol, and the liters absolute alcohol multiplied by the relevant rate of duty will then give you the excise duty payable to the administrator. And this duty then is applicable to the removal, and I put in brackets there, including sales, local sales, of all locally manufactured malt beer. The removal is only allowed from a licensed manufacturing warehouse, and the applicable excise duty on the malt beer is effectively self-assessed by the licensee. So a couple of risks again that emanate out of section 2 is that it is important, and I can't really emphasize this more, that the product being manufactured needs to be correctly classified. The disparity between traditional African beer and beer made from malt other is so huge, and the cost to the business has a huge impact. And in fact, one may argue that certain products that is considered to be beer may be classified in fact as traditional African beer. That then, based on the correct classification, that the correct rate of duty is applied, because either argument is critical. When the incorrect duty is applied and a lower rate is applied, that there is definitely an exposure to the manufacturer, and that lastly, that the calculation for the excise duty due to SARS is conducted correctly. So colleagues, we midway through what was deemed to be the agenda, but we're getting into the real nuts and bolts and the challenging bits of this webinar, and I appeal to you to stay with me and to try to wade through the next bit, which is going to be quite weighty in terms of a discussion, and that is compliance to the law. So we've earmarked a couple of sections of the law for discussion, and we'll go through them as they appear. Section 1, which deals with some definitions. Section 19A, which deals with special provisions regarding licensing. Section 36, which has specific provisions relating to beer. Section 37, dealing with the duties applicable, how that liability is established in 44. 47, how it is paid. 75 rebates and refunds, and a few surprises at the end that I don't note here because we'll get to them, and it's about keeping suspense. It's like a Netflix series. We'll keep you hooked until the next season. So you'll also find that on occasion we'll be making reference to the rules, as the rules are also applicable to those specific sections. So the first one we need to deal with is section 1, and often there's disparate views around what manufacturing is, and it may sound very, very rudimentary and very fundamental and very almost obvious, but we'll be working up to a conclusion at the end. So section 1 are the definitions to the Act, where a manufacturer is defined. And really a manufacturer is defined in the process of manufacturing as a process leading up to the creation of something. So in section 1, part Roman 1, it then defines specifically accessible goods as being a manufacturing process. So resulting from this definition, the activity of making beer is definitely defined as a manufacturing process. Again, this might sound painfully obvious, but you'll realize shortly why it's important to reflect on that. Section 19A then, which deals specifically with accessible products of the Act, defines that the Commissioner by rule, in respect of any accessible goods specified in section A, part 2, which is what we've dealt with, section 1, part 2A being excise duties, may define then whether such goods manufactured require the licensing of a warehouse. So if one reads section A, 19A with rule 19A2, you'll find in that every warehouse, every manufacturer of beer, which we've already defined, then needs to license a specific warehouse, being a manufacturing warehouse. In this discussion, we'll deal with manufacturing warehouses explicitly, but there are provisions in Rule 1982 for other warehouses, like special storage warehouses. And just a note that there's often confusion in various industries, in the liquor industry at large, between the Liquor Act and what is defined in the Customs and Excise Act. So while there may be thresholds and other requirements in the Liquor Act, the Customs and Excise Act actually makes it mandatory for manufacturers of beer to license their manufacturing warehouses. This is a very busy slide, but it's regarding specific provisions relating to beer, and one that is very critical for the beer industry. And as I said, we will be sharing the presentation, and in fact, we'll be sharing the narrative to this presentation post this webinar. But one thing that stands out of section 36, specific to the beer industry, is that every beer manufactured needs to be registered with the Commissioner. So the brand name and the quantity and the container size and the alcoholic strength needs to be registered with the Commissioner. And in fact, there's an interesting extract out of the external directive that governs, from a SARS perspective anyway, the liquor industry, and that's contained in SEMBO2, note at the bottom. In fact, the extract, and I often say it's quite a expressive statement being made, where malt beer produced in South Africa may not legally be sold or disposed of within or outside South Africa unless the brand name and the alcoholic strength have been registered with the South African Revenue Service. And I'm sure that some of our colleagues are sitting up straight now and coming to some realization. But even if you attempt to make a new brew and you want to put it out for sale across your counter, that brew needs to be registered with the South African Revenue Services as a specific product with a specific brand name and how it will be sold or decanted.
So, Gregory, before we continue, we have one quick question. If my lager, for example, has 5% on the label, but the brew comes out at 4.5%, do I pay based on the 4.5% or as what the label stipulates? And if it comes out at 5.5%, do I pay the rate for 5.5% as the label says 5%? If that makes sense.
Yeah, that makes great sense. Thanks, Julian. And I think that will become clear in the next couple of slides. So I'm going to pause that question until we get to what record keeping is required. But it's a great question. Thank you for that. And
You're welcome.
I'm sure the answer will become quite clear later. So regarding licensing and registration, and it's I think by now we've really established that one, beer is definitely manufactured, if that was ever a question. Number two, beer is subject to customs excise duties. And number three, a manufacturer of beer is required to license, irrespective of what other legislation may say in terms of the Customs and Excise Act, Section 19A, Red Book Rule 19A, is required to license. Is it a daunting task to license with SARS? I'm going to be held to truth here and say it's not an easy task. The administrator is sticky about certain things, but it's not a overly painful task either, or activity to engage in. Just by a sidebar, I have actually engaged the executive to Excise recently on this very topic of how to enable simplified licensing and registration. But at the moment, the completion of a DA 185 licensing registration form is required. There is a specific subschedule then with supporting documents. These are submitted to specific SARS offices. You would prepare yourself for a premises inspection. And just a note, there is no direct cost to SARS for licensing and registration. So SARS won't require you to pay a fee. And this may sound as a bit of a segue comment, but if any officer visiting your premises demands some special attendance payment, it is not an obligation. You are not required to pay any fees to SARS for licensing and registration. So we've dealt with licensing, registration, and product classification. So now we'll deal with the duties applicable and payable, and we're working ourselves up to the question that was asked about which percentage do I pay on. Then in terms of section 37, the duties applicable are then enforced in terms of Schedule 1, Part 2A, for excise duty that is manufactured, or for the beer that is manufactured subject to Schedule 1, Part 2A excise duties. Section 44 then of the Act defines when the duty becomes payable, or when the product becomes excisable. And it's always been, it's been a contentious matter with industry for many years prior to craft beer exploding on the South African scene. In fact, of our larger colleagues would recall that until this was made quite clear, the discussion around when it acquires its essential character has always been an issue. And this was made clear in around 2005 that the excisable, or beer becomes excisable, and the definition of the essential character is then when it reaches the bright beer tank and all other components are filtered out of the beer. So then it becomes effectively an excisable product. Not before, and so losses incurred prior to that is not subject to the loss provisions, and the accounting for the actual beer manufactured starts in from the bright beer tank. In terms of section 47, then further, it defines the payment of such duties and levies, and then one needs to read this in conjunction with Rule 1982, where it says, firstly, that all excisable products at the time of entry for home consumption of such goods becomes liable for the payment of duty. And then the time for entry for home consumption, one can express and define as when it's either locally sold or when it moves off outside of the manufacturing process and is able to be consumed by a consumer. It then becomes dutiable and liable for the payment of duties. And these duties, in terms of Rule 19A202, then becomes payable on the DA 260 account, which is submitted to a branch office. And just a note then at the bottom, confirming that the excise duty liable effectively arises when beer becomes excisable. So the liability arises when it becomes excisable, so it gets its essential character, but only becomes payable once it enters home consumption. So there is some relief that is possible to the sector. In that section 19A1 again sets certain provisions and mechanisms in place for the commissioner. And one that jumps out of 19A is in fact the power of the commissioner to defer the payment of any such duty of a licensee. So for any condition that may be established or may be applied to the commissioner, that the commissioner may in fact exercise his power to defer the duties that is liable by a licensee of a manufacturing warehouse. So we're getting to the DA 260 account, which some of our colleagues in the audience would be very familiar with. Effectively, the DA 260 account, which in recent time is also supported by, for the payment of duties, the EXD 262. But the DA 260 account is really a stock holding account, which comprises of an opening balance, the production, the receipts from other warehouses, returns of duty paid stock. So once stock has left the warehouse and it's returned for some other reason, it is added back in stock, minus non-duty paid removals, which gives you a closing balance, and the closing balance then results in what your total duty liability is. So generally, the DA 260 excise duty account is fundamentally a stock account where the difference between the opening stock and the closing balance effectively gives rise to what the excise duty tax liability would be. In terms of rebates and refunds, and you'll see my bold header, there is relief. So there are various mechanisms of relief, and I think I've already alluded to one in terms of the deferment of duties and levies, but there is also relief in terms of specific provisions provided for by Section 75(1)(d). And Section 75 deals with all rebates and refunds that a taxpayer could claim from the administrator. And a Section 75 in broad, it deals with rebates and refunds in Schedule 1, Part 2A, Schedule 1, Part 5A and 5B. And then if one reads then from the section, and remember I said that the sections are supported by schedules, then you have a specific schedule in Schedule 6, and Schedule 619.03, and there are a few of these, and I've only extracted one, for example, that beer made from malt, which has been removed from a customs excise manufacturing warehouse after entry for home consumption and payment of duty, has become off specification or contaminated, or has undergone post-manufacturing deterioration and returned to the warehouse, the full duties applicable can be claimed in terms of this rebate provision. There are a couple of intimations in this specific rebate provision that one needs to be cautious of, and one is naturally returned to the warehouse, it's entitled to a refund. I'm not going to go into this in much detail further, but there are then specific
Gregory?
post this workshop. These are the two that I didn't indicate at the commencement of the agenda of what we were discussing under the compliance to law. And the first one that we need to reflect on is Section 101. And it's a pain for most industries, and especially for those in a SMME space. But again, counter to any other legislation that may exist, the minute you start manufacturing beer for sale, you are required to license as a manufacturing warehouse. And in terms of the Customs and Excise Act, then, any person carrying out business in terms of Section 101, business in the Republic is required to then keep in one of the official languages books, accounts, and documents relating to his transactions. And apologies for the archaic nature of the law, but it is in relating to his or her transactions, as may be prescribed by the rule, and such books, accounts, and documents shall be kept in such form and manner and shall be retained for such period. And there are many suches. But in a nutshell, you are required to keep all books and documents, all transactional records relating to your business for a period of at minimum 5 years of your manufacturing process. And these should be readily available if you should be required to undergo a audit by a SARS official. And it is really par for the course for any commercial business. But sometimes when we operate SMMEs, then we consider ourselves to be outside of the fray of a commercial business because there are other legislative tolerances and allowances. In terms of the Customs and Excise Act, there are no such tolerances or allowances. And hence the word shall is repeated so many times and such in Section 101, because it's not a subject for interpretation, quite frankly. So this slide is where we'll get to answering the question on the alcohol strength and what duties and on what rate it would be applied. So in keeping, on the one side, we've got detailed records relating to the premises, and on the other side, we would have then monthly registers and records relating to the ongoing business. So on the left-hand side, we have when one licenses a manufacturing warehouse, you would then accurately describe the goods manufactured and stored. And that relates back to the registration of those specific beer products. A description of the manufacturing and the process of storage. So how is your beer manufactured? What components form part of the manufacturing process? The capacity of the manufacturing plant and equipment, and then the capacity of the storage facility. So a note on top of the specific column is if any of the circumstances relating to the input of the business may change. So for example, if you acquire an additional stainless steel tank for the storage of beer or finished beer, then you are required to inform SARS of such change. If your manufacturing process changes for some other reason, you're required to inform SARS of such change. On the right-hand side, then we have the monthly registers of the opening stock, quantities manufactured and stored, quantities used, removed, lost or destroyed, and stock balance. Part of this then, in determining the excise duty liability, and this is in response to the question of the liters absolute alcohol. On the quantities manufactured, these are then naturally, as any other business, subject to specific lots or runs or components being manufactured. And so each specific run of beer may end up being either 4.5% or 5.5%. And while the label on the bottle says 5, there are variances that happen in any manufacturing process in the liquor industry. Because the alcohol is levied on the liters absolute alcohol, it is then important to keep an accurate record of the manufacturing process and what the outcome was of that specific batch of manufacturing. So if 1,000 liters was manufactured and the liters absolute alcohol out of that batch was 4.5%, then the duty liability would be calculated on that liters absolute alcohol as it is then so sold to the consumer. So hence it is critical that when sales happen, it is based on batches, and that's why batching of especially bottled beer is so critical, so that one can then trace back the specific batch or lot that has been sold to a specific batch that has been manufactured and the alcohol strength determined on that batch. And I hope, Julian, that clarifies the question on how do I calculate the liters absolute alcohol or duty liability.
100% correct. Thank you very much.
So we're getting close to the end of our workshop, and I'm glad that I've kind of stuck to the time allotted to this workshop. And this slide is not intended, and please forgive me, don't burn me at the stake for the slide, and it's not intended to be fear-mongering. However, unlike the VAT Act and unlike the Income Tax Act, the Customs and Excise Act, because of its very nature described at the beginning of this webinar, holds very specific contraventions and actually assigns gravity to specific contraventions. And manufacturing of excisable products is then considered to be under serious offences, Section 80. And again, please forgive me, this is not intended as fear-mongering, but in terms of Section 80 of the Customs and Excise Act, if you manufacture beer and sell beer in an unlicensed manufacturing premises, you are considered to have contravened Section 80. And in terms of Section 80, the offence is liable to the conviction of a fine not exceeding 20,000 Rand, and let's read further on, or treble the value of the goods in which the offence was committed, or imprisonment of a period not exceeding 5 years, and I'm not going to take any jestful comments at this point, or both such fine and such imprisonment. It's quite come out of the interpretation and legal provisions. One is manufacturing without being licensed to do so, is a distinct risk. Then accounting for all beer manufactured. Liters, and they're not submitting the excise accounts timeously, and they're not maintaining accurate books and records and documents of that. And while it is not part of this introduction to excise, a segue note on the maintaining of books and documents. In terms of the Customs and Excise Act, if the records being kept does not expressly make it clear to the commissioner or his officers what volumes have been produced, the commissioner has in fact the power to determine such volume. And that's extremely harsh. But that is what is contained in the law. So whether or not you have accurate records, if the commissioner comes in or his officers come into a premises and determines from your purchases what your potential yield may be, he can determine what that volumes were that were manufactured and or sold from the premises. Hence, again, in countering that establishment by the Commissioner, it's so critical to maintain those accurate books and documents. So lastly, lobbying for change, tax reform ahead, and I saw Patricia in the audience. I think I saw in the audience. It's naturally a hot topic and one that will be explored further. But in a nutshell, in terms of 36(5) and Section 120, the Commissioner of SARS has great latitude to significantly impact on the beer industry. He has the powers, for example, to exempt beer of any class or kind from the provisions in Section 36. He also has the power to determine how taxes are collected. He also has the power to determine in which circumstances licenses are required or licenses are granted. And then he has the power to effect changes to the different schedules, and specifically Schedule 6, which deals with rebates and refunds. So a lot of power is afforded the Commission in terms of the Act to affect changes to how the beer industry is maintained and how it is policed by the administrator. Great, I thank you for those are the end. That's the end of our presentation, and with 10 minutes to spare to 12, we have a session for open questions and answers.
Gregory, thank you very much for that presentation. I think it's made it clear for a lot of people that we're obviously working with Excise now, that it is based on the law, and obviously we need to adhere to that law in every space. Right, we have a question over here. The first one we're going to ask is, I bought an existing brewery in 2020. The previous owner has submitted his deregistration for Excise, but is still in progress. I have advised to apply once the deregistration has been passed. We are going into a new year now of business and the usual with no excise paid as yet. Is there any means of relief in terms of a microbrewery in their situation?
Yeah, it's an unfortunate scenario that there is no direct relief that is afforded in terms of the law. I think that there is a scenario to be sketched to the administrator and the Commissioner, and in fact, through the executive of Excise to the Commissioner, for a form of relief in terms of the evidence that can be presented of when the deregistration application was submitted and when the license application was submitted. So we're happy to help you with that question, and you will have my contact details in the end. But there is a case to be made while the law does not provide for relief, for an argument to be presented, and that an alternative means of duty assessment can be brought into the fray. And so just responding to that question, while you can only submit an excise account once you are licensed as a manufacturing warehouse, there are alternative ways to bring the duty to account to SARS remaining above the law, and there are various forms that can be used and mechanisms that can be used to then maintain your integrity.
Thank you very much, Gregory. Next question we have, what is the percentage cut-off of sorghum that makes it traditional African beer? Is there a percentage?
Yeah, I preempted that this question would come up because of the very, very blanket definition given by SARS that it is a non-clear beer or a non-clear beverage. And then and that's why I in fact paused on the slide where it says usually 5%, I believe it was. I'm not going to flip back to that slide, but it says usually less than 5% alcohol strength.
Okay, so here's an example. Here's an example. You've got an unfiltered beer. In other words, it is not a clear beer product as specified in the regulations. It is around 4%. However, you've only used a small amount of sorghum in that. How does that get clarified?
Yeah, and I preempted that, and that's why I'm saying the definition is extremely broad. It said not clear, and it says usually less than 5%. And I think what one needs to, not I think, what one needs to do, as determined by the rule anyway, is that it has to be tariff classified specifically for that product. And so when the product is registered with SARS, that the tariff classification accompanies the registration. So whether it is defined to be a sorghum or a clear beer, or whether a stout could be defined as a sorghum beer, is all determined by that tariff classification.
Okay, great. Here's another question. If a brewery wants to test or experiment recipes and do a once-off brew, does this beer name label need to be registered?
No, it does not. So in R&D for any product, until that beer actually becomes commercially sold or is put up for commercial sale, the actual registration doesn't need to take place. So one, for argument's sake, could do, and the caveat is commercial sale. So one could run an experimental brew and invite a taste group over and test whether it actually meets the expectations, and then decide that this is going to be a viable product to produce, and then register the product. Because it is all forms part of the R&D process, research and development.
Okay. As I understand that you have to submit, declare all products.
Sorry,
no problem.
Sorry, I just need to interject. I'm not at all advocating that we invite buddies over and have brew parties at the administrator's cost.
Yeah. As I understand from you, you have to submit, declare all products individually to SARS. Do each of those products need to be approved by DAF, tested and label compliance? And I think it adheres back to the previous question about testing or once-off brews.
Yeah. And again, why we then said at the exclusions, the DAF requirements are very different to the SARS requirements. And so SARS does not place reliance on DAF, and vice versa. So the two bodies, in fact, work very disparately. So for a SARS registration, there's no requirement to be DAF registered.
Okay, great. I'm supposed to be reading it here. Traditional sorghum beer is millet. For example, I think my license only allows us to make beer and not wine, which is taxed differently. So you obviously, your manufacturing license is attached to what you manufacture. You can't manufacture wine with a micro brewer's manufacturer license, for example. But that's obviously licensing and things like that. How do we register individual products?
Julian, can I just respond to the previous one?
Yeah, sure.
So when one submits the DA 185 licensing application, there are schedules to it and addendums to it. So in the addendum, you would specify what the production or the application for the warehouse is, and what the products will be that's manufactured. So when the actual products change, and I think I've intimated that, then the administration SARS needs to be made aware of the licensing change and what the product difference would be.
Okay.
Sorry, Julie, just give me 1 second, please.
No problem. Any more questions from the audience in the chat that we want to handle? I know there's one coming up now as well about collabs. We'll talk about that now. Oh, right. Hang on a second. So let's just do this. Okay, there we go. Okay. You should be able to unmute now, Gregory. There we go.
Thanks, Julian.
No problem. Okay. If you have a collaboration brew between two breweries, when this is made, do both breweries have to register the beer?
That's a tricky question. I need to think about that for a second. So no, if it's the actual warehouse where the brew will take place, right? So if brewery A and brewery B gets together and says we're doing a collab, but the actual warehouse manufacturing the beer will be warehouse B, they need to register the product. And so the removal from warehouse B to A for sale will be levied taxable by warehouse B. But I don't know if that makes it clear. So only the warehouse that actually engages the manufacturing process needs to register the beer.
Correct. So if I go down to Cape Town and I brew a beer in a brewery in Cape Town, they are liable for the excise on the product before it goes to market.
Exactly. And liable to register the product.
Excellent. The new requirements registers a bond. Not sure if this was covered.
Yeah, so we didn't specifically speak about surety bonds in this presentation because that's a topic by itself, but in broad strokes, when one licenses a manufacturer, when one submits any form of licensing application to SARS, depending on the tax liability that may arise within a financial year, SARS may request a kin surety bond. So, for example, if the tax liability over a year is 120,000 Rand, SARS generally would divide that by 12 to establish an average monthly liability and request a surety bond from the licensee for 10,000 Rand. And that surety bond in the past could be covered by a signed check, effectively held in by a provisional payment. In recent times, there's a demand by SARS for actual surety held by a guarantor.
Okay. Another quick question here. Should accountants know about excise tax? Spoke to an accountant the other day and they don't know of it. And I'm guessing obviously that accountant doesn't work in the liquor industry. So I'm sure it'll be simple. If accountants work in the liquor industry, they should be aware of excise. Would that be correct?
Well, it's an unfair assumption. Otherwise, I'll be unemployed. I say that jestfully, but you know, in honesty, I use an income tax consultant, although I am an accountant. Each accountant has his speciality area, so one can't expect an accountant who specializes in VAT to have a broad knowledge of all taxes administered by the commissioner. The host of taxes administered by the commissioner includes VAT, income tax, skills development levy, PAYE, excise duties, custom duties, and the list goes on. So it's not a fair assumption to any tax consultant to be au fait with all tax legislation. So no, and hence we have specialists in specific sectors in tax.
Excellent. Ladies and gentlemen, are there any more questions? Did I miss anything? I don't think so. But who gets held responsible in a situation like that? Is it you, the brewer, or the accountant?
Okay, and you know, it depends on the agreement between the accountant and the brewer. If it is a blanket agreement for all taxation, then the liability could reside with the accountant, who then, in terms of an industry association like cyber, is protected from professional liability. So I can't really comment on, because it depends on the agreement. If the agreement between the tax consultant is limited to the scope of value-added tax, there can't be a fair expectation that you would be held liable for taxes beyond that.
Brilliant. Right, we are 2 minutes into 12 o'clock. Thank you very much. One more question regarding the above. How do we register for individual products? I'm also interested in the answer being new to excise. So just registering of products, that's a question.
Yeah. So once a warehouse has, and in broad strokes, and my details are going to be circulated post this webinar, and I'm sure there'll be further questions that arise. But in broad strokes, once the warehouse has been licensed in terms of Rule 19A, then the products, the warehouse is then assigned to a specific branch office, excise branch office, and individual products manufactured by that warehouse will then be liaised through that specific excise branch office, because then there's a central, in SARS, a central licensing committee that deals with the license of facilities, but each product is registered individually and then follows the excise project. Excise department.
Great stuff. Right, I think we have everything. Anything else? Anybody want to raise their hand? Anybody want to say something? Thank you very much once again. I hope you found this insightful. Gregory, in terms of the material, you said you'd make it available. I think Jenna from the Craft Beer Association will be managing the distribution of that information to people that have attended.
So we'll be making the presentation, or rather we're making the material available in PDF format, containing both the slides to the presentation and in narrative form. So there'll be quite a bit of explanation to what is contained in the presentation for the participants through Jenna.
Excellent. Yeah, thank you to Jenna for obviously managing the communication, sending out the links and everybody. Gregory, thank you for your time and putting this all together, as well as all the questions that we have had. And yes, I agree, we should have more of these sessions moving forward. And we will obviously work with CBASA and the Brewers Association of Southern Africa to put things like this together. I hope you found it useful. For those of you who obviously weren't here today, we will, and registered for this, please be in communication with Jenna otherwise. Thank you very much, everybody, for your time. Gregory, have a great day. Enjoy the rest of the week.
Thank you so much, Julian. Thank you to everyone who participated, and all the best of luck, and please stay safe. We're living in tumultuous times.
100%. Thank you very much. Keep well, everybody. Stay safe, and let's have a good week ahead, and hope some good news comes from this weekend. Thanks all. Take care. Bye-bye.